The broadcast is now starting. All attendees are in listen-only mode.
Okay, everybody, how you doing? This is Neil Grenning again with you on the weekly webinar. This time talking about some fundamental trading, the calendar trading. All right, just want to check that you can hear my voice and see the screen. You guys can go to webinar. Just write me down in the chat window. Joining us from Facebook in just a second. Um, all right, just a second. So you guys can go to webinar. Just write me down on the chat window that you can hear my voice, see the screen. Okay, and I would like to welcome you guys joining us on Facebook at our homepage at itrader.com. All right, now we're good. Okay, let's start. All right, I wanted to talk actually this week about the debt ceiling, but in the United States of America, they've decided to give Trump a whole month. Okay, we talked about it for voting whether the debt ceiling is going to go up or not. So today we're going to talk about. A lot of people ask me all the time, Neil, tell me, how do I analyze the market fundamentally? Okay, how do I look at the events that are taking place at the same day? All right, and how do I trade based on these events? Okay, as you probably know, in order to take right trades, we need to know technical trading and fundamental trading. Now, a professional trader is one that knows how to combine both. All right, if you know how to combine the fundamental analysis and the technical analysis, it makes me a professional trader. And today actually, what I want to show you is how to do that, how to look at the fundamental events, and how to trade based on the fundamental events, which we're going to take a look today and tomorrow at some events that are going to take place in the market, and we're going to talk about it as well. So at the beginning, as everybody knows, this is our homepage, okay, at itrader.com. By the way, I'm doing these webinars every week, once a week, every Tuesday. If you want to register, not if, but when you want to register to the next webinar, okay, you can go here through news, webinars, or scroll down here and just save me a seat, put in your first name, last name, and email address. This is a free service, okay? Just giving you details, talking about the events that are taking place at the same week, and then you can join us for GoToWebinar. You guys on GoToWebinar, if you have any questions during the webinar, more than welcome. Just write me down. I'll try to get to all your questions, answer these questions. Of course, I'm going to leave some time for a Q&A session at the end of the webinar. So if you have any questions that I didn't have enough time to catch, take a look at, we're going to do it at the end. Okay. So let's open the PowerPoint and okay, calendar trading. Calendar trading is a fundamental approach to trading, right? We said we have a fundamental analysis and a technical analysis. On the fundamental level, what we want to know, as you probably know, we have events taking place, fundamental events, economic events, that are taking place every day of the week, everywhere in the world. And I want to show you where you see these events, okay, and how do you make decisions, trading decisions, based on these events and taking these opportunities. So traders use financial calendars to receive new information. The advantage is that the information is provided to everyone at the same time, okay, which means that the market usually reacts to this fundamental event, right? And we need to understand how to read this event in order to understand what assets it affects and what direction it go, whether the price of the asset is going to go up or down. And of course, as you probably know, we can trade if we believe that the price of an asset is going to go up, we can buy it, or we can short it by selling the same asset and make money, okay, when the market goes down, when the price of the same asset is going down. So we can make profit both ways. Now, the advantage is that information is provided to everyone at the same time. So the reaction of the market, the reaction of the big money on these assets that this fundamental event is going to affect are going to take place usually strongly. Okay, when we talk about fundamental events, it has a lot of that are very significant. Okay, so we're going to see a very strong reaction at the same time, which means for us traders, can be a great trading opportunity. Okay, great. Therefore, traders can take advantage of new market trends. Opportunities are usually provided on daily basis. Great. Financial calendars are provided to traders. Okay, traders can also find calendars on the web, such as forexfactory.com or investing.com. Oh, by the way, we have it web-based in our homepage at itrader.com. Let me show you. Okay, if we go here, you go to trading tools. One of the trading tools is the economic calendar. If I click on that, okay, great. So you can see all the events that are taking place during the week, marked by stars. Okay, you're gonna see that here. Okay, if we have an empty star, it means low volatility expected, which means the event is not such a big event. Half a star, modern, and a full star means high volatility expected, which means these are the events that we want to notice. Okay, these are the events, the full star events or the three bulls events, depends what website we look at. These are the significant events that affect the market strongly, which means trading opportunities for us if we know what assets it affects and what direction this asset will go, whether it's going to go up or down. Okay, we're good so far. So we have a calendar. Okay, you can set the time to your time zone, and that's great. Okay, so the impact of publication could be high, medium, or low, as we said. All right, the assets traded depended on the publication itself. The results of the publication are provided on the calendar together with expectations, and let me show you. For example, okay, let's go to investing.com. Let's say let's put it on UK time. Let's say I live in London. All right, just put your country here. Okay, investing.com. You have a flag. You can go. Usually you can go on. Now you can go as well. English UK, for example. Investing.com will give me a lot of news that are related to England, for example, and click on economic calendar. You see that on the right side, on the right tab right here. So I click on the economic calendar, and then I get on Britain time, which is GMT +1. Of course, I can set the time from here, wherever time zone, wherever you're from. Okay, just you can click in here, okay, and set the time zone. And then we have all the events that are taking place here. Okay, so we have the hour. Okay, by the time zone here, it's English time. We have the currency that it affects, whether it affects the New Zealand dollar or a euro or so on and so on. We have the impact marked by bulls. As you can see, one bull means low volatility expected, which means not such an important event. Two bulls, we're talking about modern volatility expected. And the events that we want to pay the most attention to are the three bulls events, which we expect high volatility is expected from these events, which mean trading opportunities for us. Okay, so you can find it in our website on investing.com, Forex Factory, and a lot of other websites that has calendars. We good so far, guys? All right, so back to the PowerPoint. So the assets traded depended on the publication itself. The results of the publication are provided on the calendar together with expectations. Okay, let me show you again. As you can see, so we have the event itself, right? If I click on the event, it's going to give you the description exactly of what the event is. And we have three kind of numbers, three rows. You see, on the right side, we have the previous, okay, the previous number. Last time this event took place, what was the result? So I can see it on the previous. And then we have the forecast, which this is what the analysts believe will be the number. And we have the actual number exactly at the same second of the publication. Now you have to understand that the whole world, okay, sees at the same second the same numbers, okay? So the reaction usually, if it's a three bulls or a full star or whatever you want to call it, if it's a significant and a big event, all right, we're going to see the reaction of the market at the same second, which means we have to act fast. All right, we have to act fast and we have to act smart. The market, okay, the whole market, just for you to know, the capital market is based on expectations, which means we trade on the difference between the forecast and the actual number, okay? Right now, let's see if we have any big events today. Okay, Janet Yellen is going to speak very soon. She's the head of the American Federal Reserve, as you probably know. When she speaks, you see it's a three bull event. Okay, this is right now. You see this line here. Okay, so she's gonna speak, but This is not an event of a 1 second because it might be a 1 or a 2 hour speech, but it means a lot of money is going to go into the market. Depends on what she says. She's going to talk about the interest rate, okay, whether it's going to be a third hike, and about printing money and buying bonds in the United States. You can watch it on Bloomberg or anywhere. Anyhow, this kind of event affects the market strongly. Usually the US dollar, the US banks, gold, and so on. Uh, Maybe you would like to take a look at the market when Yellen speaks and listen to what she says and see the reaction of the market. But usually most of these events are taking place in one time. For example, all right, today we had the new home sales, okay, in the United States. We expected 588,000 new in the past month, okay, new home sales, and we had only the actual number was 560, which means more than expected, okay. So it damaged the US dollar a little bit. If the US dollar goes down, I can trade against the dollar, and this is a trading opportunity. So I have to take advantage exactly at the same second of the publication of the actual number. Okay, are we good? Great. Okay, back to the track. Okay, this week's top events. All right, for example, Tuesday, today we had the consumer confidence. Are consumers confident under Donald Trump? This is the question. Okay, the confidence of the consumers. Asset to trade will be the US stock market, which means, okay, we had it today at GMT. I'm just trying, let's try to take a look at things that didn't take place yet. You know what? Let's see the reaction of the market. Okay, Tuesday to GMT time, all right? On my MetaTrader is going to be 3 hours more, which means 5 p.m. All right, consumer confidence, consumers confident under Donald Trump. Let's see what was the result and the reaction of the market. So, consumer confident. Oh, we expected 120. The result was 119.8, which means not such a big difference. I think we should skip to the next one because I don't expect a big movement here because it's almost, you see, the forecast and the actual were very close, which means very close numbers, not an opportunity. If we go to new home sales, okay, let's see if it affected. It was less than expected. Okay, let's take a look at the reaction of the market. 5 my time. All right, so we go here. Let's take a look at the 15-minute chart, for example, today. So the reaction was right 5 o'clock here. You see that the dollar got weaker just a little bit. Okay, so it's not such a big event, but still we had like 30 minutes, okay, that the market went down. It depends how many lots I take, okay, and of course, as big as my trade, the profits can be higher. You see the open price here was 112, okay, and it closed here at 112.13. The opening price was 112.16, okay. No, what was the lowest one here? Low 100. Okay, we're talking about around 6 pips, all right, in 30 minutes, 5 pips. It depends how many lots I take in such an event, all right, if I trade it correctly. We're talking about a few hours ago, but not such a big change. Okay, good. Janet Yellen is going to speak today. It's going to be a big event, okay? It's going to take place 15 minutes to 5. Janet Yellen talks. Will Yellen hint on a new rate hike by the Fed? Assets to trade will be the US dollar, US banks, and gold. Just remember that we have an opposite correlation between the US dollar and gold, okay? Of course, if we expect another hike, it's going to be good for the US bank stocks, good for the US dollar, negative for dollar, and for the gold, I'm sorry, and the opposite. Good. On Wednesday, you can write down all these events. You have it on investing.com or any other site. Wednesday, 2:30 GMT, we have the oil inventory. Can oil prices break strong key levels on new supply? All right. Of course, asset to trade will be oil and oil currencies, such as the NOK and such as the Canadian dollar and the ruble. Okay, these countries that has a lot of export of oil. Usually when oil goes up, okay, the currency is getting stronger. They work on the same correlation and the opposite. So oil inventory is a weekly event, just to show you on investing.com. Let's go back to the calendar. Tomorrow, let's go to tomorrow. And scroll down here. Okay, oil inventories, oil in the United, crude oil inventories. You see, tomorrow we expect around 2.2 million, 300 more barrels. Okay, in the United States firms. If the number, the actual number tomorrow is going to be higher than that, which means we have more supply of oil, we expect the price of oil to go down. Okay, if the number is going to be under, which means lower than 2.2 million, 0.3, we expect the prices to go up, because if we have less than something, we have more demand for it. Demand, price goes up, more supply, usually price goes down. All right, you see marked by 3 bulls. This is a weekly event, takes place every week. Great event, by the way. Okay, great. Another thing, Wednesday, tomorrow at 8 GMT time, we have the New Zealand rate decision. Will the Reserve Bank of New Zealand surprise the markets and change its interest rate? Okay, right now the interest rate in New Zealand is 1.75. As you can see, let's go down here. 1.75. It's expected to stay the same. All right, so let's take a look if it's going to be higher. Of course, a higher reading than 1.75 is good for the New Zealand dollar. Lower than that or stay the same, it might be bad for the currency. Another great opportunity. Usually, interest rate decision is a great opportunity. A lot of money coming in, and you can find the direction and trade with it. All right, good. Let's take a look at another opportunities. You can write everything down. On Thursday, 12:30 GMT, we have the US GDP. Okay, is the US economy growing under Trump? Okay, let's see if the GDP is higher or lower than expected. Assets to trade, of course, will be the US dollar versus all majors. All right, this is a big event. Okay, GDP in the United States is a big deal. Let's see if the economy under Trump is getting stronger or not. What are the expectations? Again, we trade, okay, on the difference. Let me show you. Thursday, we trade on the difference between, let's do this week and see all the events of this week. And look for Thursday. So Monday, okay, let's scroll down a little bit. Why did I get stuck? Okay, let's go more. Let's see. Good. See, this is Friday. Okay, so on Thursday we have the GDP quarterly. Okay, we're expecting 3%. Of course, any reading that is higher than 3% should be bullish and supportive for the US dollar. Any reading that is going to be lower than 3%, it's going to be actually bearish, usually not good for the US dollar. Of course, a reading that will be exactly 3%, no news is good news. So if we got what we expected, is good news for the US dollar. All right. So these are all fundamental events that you can trade on. Okay, trading tactics. First of all, prepare your account before each publication. If there is a publication and you don't have enough funds in your account, this is the time to deposit some money to your account so you can trade and take advantage of this opportunity. All right. Prepare your account. Understand which assets are affected, as I showed you. Create trading setups per asset. And strong publication deserve higher stop loss and take profit orders. If you usually use stop loss and take profit, okay, it should be, if you trade on an event, it should be far more than where you go in, where the representative rate, okay, the starting price, let's say, because these events, the strong events, usually affect the market strongly, and you can see 50, 60, or 100 pips move. So set your stop loss and take profit orders, of course, usually on the resistance and support lines. So of course, creating a trading setup per asset. Every time before you trade on any fundamental event, you want to put some resistance and support levels, okay, some key levels to understand how high or how low the price might get after this event. All right, understand the assets, put some technical key levels, support and resistance. Go with the you trade, as I told you, you trade on the difference. Okay, we trade on the difference between the forecast and the actual. The price might go down or up all the way to the support and resistance lines. And of course, put your stop loss and take profit not too close to the to the price that you go in. All right. Any questions, guys? This is the time. Anything you would like me to clarify, to repeat, I'm here for you. This is the time. By the way, you have my email address. If you have any questions during the week, okay, just write me down. I'll try to answer all your emails. And next time, you guys on Facebook, if you want to register, okay, just go here to our homepage at itrader.com and right here, and you can register through the website. All right, are we good? Okay, thank you very much for participating, guys. I'm gonna listen to Yelen's speech, okay, very soon. And good luck and have a great one. All right, bye bye.